What's the difference between a book and B book, but from the trader's perspective?
From the trader's perspective, it doesn't really matter because you are on a demo, and the conditions are different. But still, it is important.
You also mentioned hybrid model.
It takes the trades from their clients and it either takes the other side of the trade.
What risk do traders face in relationship to prop trading firms?
Comparing to normal trading, when you're trading your own money, you are facing a lot of, you can lose the money, it's yours, the broker can bankrupt,
Could you maybe clarify these terms and explain why they are forbidden?
Let's say one by one, yeah.
Welcome to Moneymakers. I'm Lenka and I'm delighted to have a special guest with me today, Adam Dulovec, who is the director of the trading division at Prop Trading, a well-known player in the prop trading industry. In today's interview, Adam will talk about the difference between A book and B book, but this time from the trader's perspective. Also, what CFDs are and why brokers offer CFDs instead of stocks. Additionally, we will discuss why arbitrage trading or tick scalping is forbidden. So stay tuned for this engaging conversation, and if you enjoy our content, don't forget to like, subscribe and hit the bell for notifications. Hello Adam, welcome to our studio for the second time.
Hello Lenka, and thank you for having me for the second time.
In the first interview, we spoke about the history and the future of the prop trading industry. What are the emerging trends, and also what were the biggest challenges the industry has encountered. This time, we will start with the most frequent question that we get on our Discord, and it is, what's the difference between A book and B book, but from the trader's perspective?
That's a very frequented question, even from general traders. I mean, not only prop firm customers, but for traders in forex markets in general. But let's take it from the perspective of a prop firm's client. To be honest, there is not much difference between A book and B book broker that your prop firm is using. The relationship between a retail trader of a prop firm and the prop firm is just between them. There is no connection to the actual broker that the prop firm is using. The trader is using is trading the demo account all the time. It's not going to the live account at all. And the execution that matters for the live account, for the A book, B book, or hybrid model, whatever. It depends when you are on the live account. All right. So from the trader's perspective, it doesn't really matter because you are on a demo, and the conditions are different. But still, it is important, for the prop firm, because the prop firm has to do something with the trades or signals that the traders are providing it. So they need to hedge it or copy it or just ignore it. It doesn't matter. It's their know-how, what they do with it. But if they decide to execute the trades on the real market, they need to execute it with its broker. And then it matters, the live account, the speed of execution, everything, it matters. And whether it's A book or B book, let's say, doesn't matter that much. Sometimes there used to be a lot of conflict of interest among B book brokers. Back in the day, it was like I wouldn't say good old days, more like bad old days, when B book brokers were really not playing fair with clients, just taking the counterparty and then changing the condition with traders, to not be in their favor, so they can make money on that. But it doesn't happen so much. I wouldn't say at all, but it doesn't happen so much nowadays. Most brokers are fair, even if they are B book. But if you are A book, there is certainly less conflict of interest between you as a client, now you as a prop firm, client of the broker trading on a live account.
You also mentioned hybrid model. What does it really mean?
Hybrid model, basically that's a model when the broker is using both. It's using A book and B book. It means it takes the trades from their clients and it either takes the other side of the trade. It means it takes it on their book, it's the B book, and being the counterparty, it means when the trader is winning, they are losing, and vice versa. or the ebook, when they just take the order and send it further to the market, to the liquidity provider or to the exchange or somewhere. And basically that's their know-how and their risk management to decide what kind of trades, what kind of clients they put on ebook or bbook, in order to maximize their efficiency. Because just one more important thing, if you are on bbook, usually it comes with better execution, because you don't have to have a connection to another party, to the liquidity provider or a stock exchange. You have less cost with that, so you can lower the commission to the clients, but still you need to remain with some level of quality for the traders. That's important for this kind of model.
So does any prop firm send trades live?
To be honest, I cannot say. I bet yes, because it's about the risk management. If you have prop firm traders, they are constantly making money. You need to hedge it somewhere. You need to, copy those trades on a live account, because you are paying the profits to them. Even though there is a split, you pay 90% to them, you keep 10, but the 90% you don't want to take it from your account. If they are successful, if the traders are making money constantly in long term, you want to make these trades too. You don't want to pay it from your pocket. You want to pay it from what they actually make on the market and keep your 10% from the split. So I bet yes. It's hard to say. Maybe some firms don't do it and just might cover it from the income they get from fees, from the challenges, that might happen, but how it actually is, it's know-how of every firm. It's about the risk management they have, how they manage their risks and stuff like that.
Right. How crucial it is for a prop firm to choose broker?
From what I said before, it's very crucial for the second part, for using it for the live execution and so on, but also for the stability and everything regarding to the infrastructure. Basically, the prop firm needs broker, especially for providing the structure, the servers, the demo, the data feed, everything like this, for the challenges and the funded accounts for its clients. And the stability, the technical knowledge, the professionalism of the broker, the communication, it needs to be on the top level to serve the prop firm to be the best for its traders. So I would say it's very crucial to have the best broker they can.
What's the difference between good broker and bad broker, and what sets them apart?
Yeah, from this perspective, from a prop firm or let's say prop firm client, it's all about the structure, the servers, where the servers are located, because it adds to, for example, execution quality, for the latency, for the data feed. You counting milliseconds basically when you're connected to markets. You want to have the most up-to-date prices in your platform. The execution needs to be really fast, in terms of milliseconds, to provide the best execution. Even though it's a demo, it still counts. The stability, of course, if the servers falls down, if the platform is freezing, not working, it's terrible, so it happens. There's a lot of broker like this. So it's very crucial, to choose the good one, in terms of be the best for your clients. So there are differences.
You mentioned latency. Probably not everyone knows what it is, so can you explain it? Yeah,
latency, basically that's the delay between when you send the order to your broker till you get the order filled or executed on the market. Usually counting like I say milliseconds. For example, here in purple trading, we got it might vary among the instruments, but let's say for euro-dollar, for example, last month I think it was like 65 milliseconds for 90% of trades. So this is kind of a benchmark.
You also mentioned that it can happen that the platform just got frozen. What can I, as a trader, do when I want to trade but the platform is frozen?
If you are a client of a broker, then obviously you can call support. There should be a hotline available, like 24/5, let's say, or at least for the time that the market is open. And you tell them that you want to close your trades or manage your trades somehow, or at least report it, because when your platform is frozen and you cannot manage your trades, it's broker's responsibility usually, so they should refund you some money, of the trade, evaluate that. That's what we usually do. If something happens, it doesn't happen often, but it's the fairness of the broker, how he treats clients when this happen, ability to know there was a fault, there was a technical fault, some bug or stuff like that. For a prop firm trader, I would say, it's more to contact the prop firm and they deal it with the broker later. Of course, they might be technical issues, it's just stuff, that can be broken, connections might be broken. It just depends how it is, where does it come from, whether it's the general market, whether, for example, the market is stopped in general, like the futures market stops or the CFD stops, or it's just the platform, just this broker. So
let's move to risks. What risk do traders face in relationship to prop trading firms?
Not much, to be honest. Comparing to normal trading, when you're trading your own money, you are facing a lot of, you can lose the money, it's yours, the broker can bankrupt, you lose the money, you got something covered from the coverage fund. But when you're trading with the prop firm, the good thing about it is that you are not using your money. You just pay some fee for the challenge. You got this account, this virtual money that you can trade with and get the payouts from. But for example, in the worst scenario, when the prop firm just bankrupts, what do you lose? You just lose your fee. If you are good, you are on the founded phase, let's say. For some time, you already made some payouts. So maybe you lose the fee, maybe you already got it back, maybe you lose your payouts, the next payout. Then what is good to look for is when you choose in a prop firm, then just look for those who do very fragment payouts. If they do payouts monthly and it bankrupts at the first day of the month, or the last day of the month, just before the payout, then you lose this payout. It might be thousands of dollars. There are good payouts sometimes. So I don't think for traders do it like bi-weekly or weekly?
We do it weekly. Like the first one is in 2 weeks, but then the second one can be in a week.
Okay, so if you guys bankrupt, then your traders won't get the
we will never.
Fingers crossed. Yeah, but basically this is the only risk from trading with reliable prop firm. We know things can happen in business. The other maybe is when choosing prop firm, at the beginning, because nowadays there are hundreds of prop firms already. And none of them, not all of them are very fair. There are scam companies, there are companies that are pretending to be other normal companies, so it's be very careful when you searching for one, search for its presence, whether they got physical offices, how long are they in the market, whether you do some content showing faces of the CEOs, staff members and stuff like that, find some reference online, that's good to look for, because there is plenty of cases that some traders actually wrote us that there's a company named XYZ and they claim to be our partners, but there was nobody like this, from our partners. So there was basically a scam trying to pretend to be prop firm, collecting the fees and not doing payouts at all. So maybe not even doing the faces, the challenges, just collecting the fees, I don't know. But yeah, that might be another risk. But there's just this too, Otherwise, I think it's pretty riskless if you compare to regular trading on your account.
Guys, I just want to mention you are always welcome to come to our office and see our team, our studio, or just if you want to have a chat. So we also organize some meetups. We just had one last Friday with the scalping tournament. So I'm looking forward to seeing you in the office. Back to the interview. Tell me, we all know that the prop trading industry is not regulated. Is it actually beneficial or detrimental for trader?
For trader, it's hard to say because there are different opinions on that. If you ask a regulator, they will say it's not good. If you ask the company, the business, they don't want any regulation. But some of them maybe yes, because the market might be already saturated. There is a lot of companies, like I said, maybe hundreds of prop firms. So maybe it's time to have some regulation. I'm not saying if it makes things better. Usually the regulation just tightens things up, but maybe it will just clean up the market, get rid of those scammers. Maybe they will always be there, but yeah, it will definitely come. That's what I think in next years we can expect that some regulation probably will be introduced even to this industry. But now let's just enjoy that it's not there. It will not come back once it will be once they start regulated. Okay, so in comparison, for example, with traditional forex trading, and you trade on your account with the broker, there has been a lot of regulations, and it's still getting more and more regulated. And for example, there are markets, there are geographic regions when forex trading or CFD trading is banned. For example, there's Belgium, maybe in Brazil, some countries in Indonesia, where you cannot trade on your account. Or there are other countries like USA, for example, when it's very hard, to get a CFD account. You have to, for example, be a professional trader, meet some condition to actually be able to get there. So this is very hard, for some clients all over the world, to trade actually CFDs and Forex in general. So in this case, they actually might become a client of a prop firm because they are not trading, they are not trading own money, they are basically just purchasing a demo account, they're paying for a demo account using an online service. So there is no restrictions like this on prop firms, I think, at all. There are some restrictions on marketing, on advertising, but because it's not regulated, and you will be advertising, for example, in, I don't know, maybe some Latin America countries, I think Argentina or maybe Brazil, they have these restrictions on marketing. They can not do much about it. If you are a regulated broker, they can just go to your regulator, complain, they can give you a fine or withdraw your license. But you as a prop firm are not regulated. They can ban your website, for example, but the traders from Brazil, Argentina, they can still use a VPN, find you and purchase the product. That's basically good for them, So prop firms are just letting everybody to get some piece of the trading industry.
One of the questions we also get on our Discord is, why does every prop firm have different trading conditions?
Let's say every prop firm, they don't have the same broker. Even though in purple trading we got a lot of prop firms already, other prop firms might be using a different broker or even their own solution. Maybe some of them, there are like 2 or 3. So that's the first thing. Every broker has different, let's say, instruments in the offer, different setup, different platforms that they are offering to prop firms. So that's the first part. The other part is that even with the same broker, the prop firm can somehow modify, the conditions they are giving to client. They can have a different spreads, different slippage, different instrument offer. This is something that every prop firm can actually modify within purple trading. They can do their own stuff to some kind of differentiate they offer to the clients. Stand out from the crowd somehow. So yeah.
I know that purple trading is a well-known player in the prop trading industry.
Oh yeah, thank you.
Who are your customers?
Usually the people behind prop firms, those they are like different. Some of them are just entrepreneurs in their age, trying to find some new business, trying to catch the wave, enjoy the hype. Some of them are just young students, from all around the world. Some people from Africa, some people from USA, some local people that can expand business. There are plenty of. Basically, everybody wants to have its prop firm, I think, these days. But it's needless to say that it's not very easy. I mean, the barrier is not so big, but the know-how and the presence and the being ready for the expansion for the whole world, basically, because you are creating a business that you can get customers from all over the world. And one day you can have 2 customers, the other day you can have 100,000 customers. It can happen very fast, and if you are not ready for this, it's very hard. So it's not like we are doing business with everybody. We have some first consultations, and if we see that people doesn't have enough sources, knowledge, and stuff around them that would be able to run a prop firm, we don't do that. It is not that easy.
Okay, so how many clients do you have so far?
You mean prop firms?
Yeah.
It's tens, let's say.
Nice one.
Tens of clients.
We know that you as a broker, you rent infrastructure to a prop firm. How demanding is this infrastructure?
It's very demanding, and thanks to that we got this business going on. It's very hard, to build all of this. It costs money, definitely. There are fees because you are using a lot of different softwares, from the platforms, from the bridges, connections, from the liquidity and stuff like that. But you also need a lot of people to maintain this. You need highly skilled people. People that are available all the time, to check the server's connection, to be able to act when something is broken. And when something is broken, it's not always the same. Sometimes it breaks differently, and you need people that have the experience, that have the knowledge how to fix things and fix them really fast. When platforms goes down, you cannot wait 2-3 days for somebody to come and repair it, because they would be paying a lot of money for refunds probably. So from this point of view, you need experience, people, the money to pay for that cost, and it's like I said, our business. And I don't know about many prop firms that would use their own solution, maybe 1, 2, 3 in the industry. It's definitely better to hire this infrastructure and know how outsource it, and you will save definitely money and maybe in some portion of your nerves if you're a prop firm owner.
Definitely. If we talk about the instruments most of the traders use or trade, what are they?
It really depends on the situation in the market, in the world, in the politics, what's happening. Like, I don't know, maybe last year of February when the war in Ukraine started, there has been a lot of trading in natural gas and oil because they are a huge producer. There were some restrictions, sanctions on the Russian oil, so the prices of oil and natural gas especially, they went up. So when something like this is happening, for example, COVID situation, they locked these mines in Switzerland, so the gold went up. The stocks of these minor companies went up. So it really depends. But if I would say generally, like favorites, average in 2-5 years, there will definitely be euro-dollar as the most traded currency, like a forex pair, oil, gold, maybe some indices, DAX, Nasdaq, S&P. These are all the time favorites that most traders tend to trade.
I'm curious why some of the brokers, they offer CFDs instead of stocks. So can you explain it? And maybe even say what CFDs are.
Yeah, basically CFD it's a contract, contract for different CFD, and you can have this contract for different, basically for anything, So let's take, for example, a stock. When you mentioned it. So I don't want to buy the physical stock, or might be anything. Might be, let's say, gold. Physical gold. It's a better example. So I want to buy gold, but I don't want to buy futures or worry about some delivery of that asset to me at the expiration date. So I just find somebody who's offering a CFD, and I just have this contract for him. And for example, if we were going to the contract together, I would be a buyer, you would be the seller of this amount of gold that would be lying here. I would buy it from you, not physically, but by the contract. You say, I want to sell it to you. I say, okay, I'm buying because I think the price is going up. If it's going up, you will pay me the difference. If it's going down, I will pay you the difference in the price. But it's just about the CFD as an instrument. The CFD is a contract. So we just care about the price of this gold, but not physically about this amount of gold that is lying here.
Okay, so for trader, it doesn't make any difference if I trade stocks or CFD for the particular stock.
Yeah, there is a lot of differences. Basically, you're just speculating on the price with CFDs. There is no stamp duty. There are no delivery dates for future and stuff like that. For example, with the CFDs, you can have more flexibility with short selling. Sometimes there is a situation that you cannot short sell a stock, but with CFDs, it can happen, but not so often.
And what about dividends? Do I get dividends?
Yeah, they are there. It might vary.
So if I hold CFDs, I get dividends as well.
Not necessarily, usually yes. For example, with peripheral trading, yes, we have dividends, but there might be even CFD without dividends, so you better check when you're trading CFDs whether it's paying dividends or not. But one important thing is that CFDs became very popular in the mid, let's say 90s, early 2000 for the hedge fund managers and the professionals in the trading industry, because they were an instrument when you didn't have to care about this physical stuff, the deliveries and the stamp duty on stocks, and they can easily hedge, their exposure with not so much capital because they were using a high leverage. And the leverage, I think, it's the most crucial difference between the regular instrument and CFDs, because the leverage lets you use a smaller amount of capital to make the same amount of result. Of course, it's been made for professionals, and it gained a lot of popularity with online trading because it's easy with small capital, to trade with a lot of nominal value of the instrument, and that was good for retail traders. But what was not good for retail traders was actually the leverage in the same time, because it's double sword. You can, multiply your gains, but even your losses. And if you don't know what you're doing, then the leverage may just clean up your account very, very fast. So if you're starting with trading, just start with small leverage or even zero leverage. Learn what to do, and then you can increase the leverage just step by step. Don't go for one to whatever. We see brokers just offering pretty high leverages. But it can be, like I said, double sword, so be careful with that.
Yeah, absolutely. Let's move to liquidity provider. So what is a liquidity provider, and what is his role?
It's basically broker of a broker. If you run a brokerage company, you need somebody to have for cleaning your liquidity. No matter if you run an A-book, which means that you are sending the orders directly to the liquidity provider, or B-book, where you might hedge your exposure. You need somebody. Usually brokers have more than one. Some have one, but it's better to have more. From the point of view of prop firm or a trader of a prop firm, it's important from one specific, let's say, in one specific case. Because when you're trading on a funded account, it's still demo account, but there is a feature called simulated depth of market. And this simulated depth of market is basically trying to simulate what's happening on the live account. On a demo account, you just get an instant execution. When you open a trade, you instantly get the order filled on the demo account, because you're not waiting for the counterparty. But when you're on a live account, you see the data feed, it's the same with demo, but if you want to buy something or sell something, you need to wait to be matched with the counterparty that's do the opposite of the trade, which sometimes it takes time, that's the latency, that's the milliseconds we are counting, but it also might take, let's say, a little bit a different price. So there's something called slippage. I think we talked about it in the previous interview.
In the first interview.
So this slippage on a live account is different from a demo account. And when you are trading on the funded account on the third phase, you have a simulation that is basically trying to get the depth of market from the live account, from the live market, from the live liquidity in the market, and simulate what happens in the live market, and simulate it on the demo account. Hopefully it makes sense.
Absolutely.
And it's important because the broker is taking this liquidity from the liquidity pool, from his liquidity provider. So he sees the liquidity from the liquidity provider in the data, and then he simulates it on the demo account. So it's important even for the traders, and this is the point where it actually is good to know that your prop firm has a quality broker who has quality liquidity providers, because the depth of market is deep enough to have a lot of liquidity, and when you trade higher volumes, you don't have so much slippage, etc., etc.
If we talk about the liquidity provider, can I, as a trader, find out who is your liquidity provider, or do you have several liquidity providers?
We have several liquidity providers. Usually, brokers state it on their website. With Purple Trading Seychelles, I think we got something mentioned there. We can show it later on the website on the screen. In terms of European brokers, for example, those that are regulated under European Union, they actually have to make it public every year. You know, for the previous year, the data, the real data, what is the percentage of the trades executed in which liquidity provider, which trading venue. So it is like that. But for the rest, I mean, outside of European Union regulation, it's more about asking the broker or finding on the website, but it doesn't necessarily need to be there.
For traders, previously Billions Club, the use of HFT, arbitrage trading, tick scalping, grid trading, one-sided betting and emulators is forbidden. Could you maybe clarify these terms and explain why they are forbidden?
So
let's start with HFT.
Let's say one by one. Yeah, HFT is high frequency trading. Usually it requires a lot of computing power, a lot of, let's say, computing power, computers, you know, algorithms that basically do very fast trades.
Yeah.
You know?
Some people, they actually discuss whether HFT is like 1 second or 20 seconds.
I would say less than 1 second. You know, it's really, really fast. I don't think most retail traders actually can do this. I know in the retail trading industry, somebody's doing 20 seconds trading, calling it HFT, but to be honest, it's not at HFT. You know, HFT, and why it is prohibited is because it causes a lot of issue for the risk management of the prop firm. Basically, if you are trading on the demo account, even though you got the simulation of the execution, it's still not the live execution. You know, the depth of market is simulated, but the execution is somewhat different. And you do HFT, it means you trade with less than second. There is not much space for the prop firm to actually hedge your trades or copy them to the live account, and they are, you know, losing with every little movement that you make. So it's very hard to follow such a trader and their signals. So that's why it's banned.
Then also we have tick scalping.
Basically, it's very similar. You know, tick is the least movement possible of the price of the instrument. So basically, if you doing tick, it might be during second, millisecond, and again, it's very hard, you know, to follow these trading signals from traders to copy them on the live account. You know, so that's the same reason.
Then we have grid trading.
Yeah, that's a risk management system that's different. It's like martingale. Grid is something different. Basically, you're just adding to the position. You know, if it goes with your direction or against you, just adding maybe the same account, maybe you double the volume. And these systems are, again, very hard to replicate because they usually function for some period. It might be a week, but it also might be a year. But what is very common that one day it comes to an end, and even though the equity might go like this, then at the end it goes very down low, cleans up the account, and again the prop firm who is trying to hedge its risk or copy the trades, they don't know what to do because you know, it might be copying those trades, you know, doing the same direction, but then one day it will lose everything just like the trader. If they do the opposite and the trader keeps winning for 2 years, they might be losing for 2 years, you know, so that's very hard, and that's why it is banned.
Thank you very much for coming to the studio for the second time. I really enjoyed the interview.
Thank you, and likewise, you know, me too.
Guys, and if you enjoyed our content, then don't forget to like, subscribe and hit the bell for notifications. And also, if you haven't seen the first interview with Adam, don't miss it.